Hello, everyone. This is Edmund Bradford, and I'm delighted to have with me my good friend and colleague, Professor Malcolm McDonald. We've done a lot of things together, both at universities and out there with real companies. Malcolm has over 30 years, I would say, without putting too much of a number on it, over 30 years of experience in marketing, and is truly one of the great marketers out there in the world. And in this short series of videos, we're talking about shareholder value, we're talking about marketing, how they both connect together, and also how they connect into just being a good company. So welcome again, Malcolm, and thank you for joining us. So what I'll ask now is that simple question about how does a good market strategy improve shareholder value?
Wow, again, Ed, you are known, certainly to me and those who know you, for asking very difficult questions. And this isn't the easiest question to answer, but I will give it a go. I mean, first of all, to put it in perspective, what are the components of a marketing strategy anyway? And you know, I've sort of made a bit of a list here. It's not complete, but it's got the essential elements in it. First of all, you need in an organization an inspiring vision. You need clear strategies. You need rigorous segment and brand positioning. You need consistent innovation. You need superior customer value. You need high employee morale. You need tight cost control and concern for all stakeholders. Now, what could be easier than that? And the thing is, I've got 127 scholarly references, which obviously I won't bore people with today, but over a long, long period, these scholarly references have drawn a link between successful marketing strategies and long-run financial success. And, you know, they are very similar to the list I've just, spoken about. I mean, firstly, you know, you've got a deep understanding of how the market works. That's common across all successful companies. Correct needs-based market segmentation, not that garbage that's taught in many places about socioeconomics and demographics and geodemographics. I mean, for example, just to get it out of the way, Prince Charles and Ozzy Osbourne are both socioeconomic group A, but I don't think they behave the same. And you've got understanding customer needs. It sounds simple, hard to do, but it's a factor. And then differentiation, positioning, and branding, and planning for the future. Now, I know in my work, Ed, what kind of organization I'm going to be facing when I get the board of directors, the operating board of directors. And my first question to them is, without talking to each other, write down on a piece of paper or type into your computer, what are your key target markets in order of priority? The second part of that question is pretty obvious. Against each of these key target markets, what's your company's sources of differential advantage? And invariably, companies that haven't got those characteristics, instead of talking about key target markets, they start whittling on about their products. And it reminds me of, you know, the near disaster that IBM had when they thought they were in the mainframe market. And you know, more recently, Gestetner thought they were in the duplicator market. More recently, Kodak thought they were in the camera and film market. And Nokia thought they were in the phones market. You know, it's not products, and it hasn't been for ages, that give you differentiation and create satisfaction for customers. It's the way you relate to your customers and your markets. And I just want to, by way of closing this off, to give you one quick example of the silly notion that people have about what is called CSR, corporate social responsibility. Of course you have to have it, but it has to go hand in hand with shareholder value added, because if it doesn't, it's not going to work. And I give you one example. There was a famous chemical company that used to be the bellwether of the British Stock Exchange. And it was a wonderful company. It was good to its employees. Its employees loved working for it. It was good to local communities. It was good to charities and so on and so forth. The problem was it wasn't as good at satisfying customer needs as the DuPonts and the Siemens of the world. Consequently, their shareholder value was not in the same category and started reducing. And the result of that was hundreds of thousands of people unemployed, no more money for charities, no more money for local communities, and so on and so forth. So I'm afraid in order to be a good citizen, you also have to create shareholder value. And I hope during these brief few minutes, Ed, that I've given you the components of what a successful strategy are. So I better stop whittling on now and say, that's my answer.
No, that's excellent, Malcolm. And I know that you are a big believer in marketing, not being in the basement of companies. And in a way, there's a danger that not being in the basement of companies. It needs to be in the boardroom of companies. Yeah. And there's a big misunderstanding, I think, around marketing, that strategy is done by somebody else, somewhere else, another function, another person, and marketing. I remember you saying marketing is really the people that blow the balloons up, at corporate events. And so I think the point you're making is that marketing has a major role to play in actually creating shareholder value by the impact and influence that they have on the market-facing strategy that the company is adopting.
Of course, and I mean, if you think about that example I gave you, when I've got a board of directors there, and I ask them what their key target markets are and what, in order of priority, and what their sources of differential advantage are. If they can't answer those questions, Ed, it tells you straight away that whatever they think marketing is, they haven't got it in the organization. Because what is it that makes organizations successful? It's actually selling something to somebody. You better know who you want to sell it to. You'd better understand their needs. And you'd better make them an offer that makes them want to buy from you rather than from somebody else who's got something similar. Now, I don't care whether you call that marketing strategy or what, but it's a bit fundamental. And if companies can't answer those questions, then I know they haven't got successful marketing strategies. And therefore, they will either be in a growth market, but they won't be profitable for long, or they're about to go belly up. Because sooner or later, you have to get those components in place.
Thank you, Malcolm. That's excellent, and it's a huge subject to be said. But we're deliberately keeping these little conversations short. In the next conversation, we're going to be talking about how a good market strategy helps you to be a better company. So thank you once again, Malcolm, and look forward to speaking to you again shortly.